guys, been down for a few days, and as you could probably tell, it has something to do with my lungs and my throat. However, we're back because the show must go on. I want to let you know something about an oak tree. It's known for being strong and steady, and that's exactly who Oak Tree Wholesale is. They've been longer at the game with DSCR than anyone. Their bank statement loans are priced great. Their technology is all brand new, and all of their account reps are here to help you out. And if your team wants a private training, all you have to do is click this banner right over there, and we'll jump on and do this. On with the show. New Jersey and Newark-based Lakeland Bank settled a case for redlining with the Department of Justice. Yet another lender getting sued for redlining. Now, Fannie Mae, along with Bank of America, just set up the most egregiously redlined product, spawned from the same federal government as the Department of Justice. Isn't it kind of odd how one agency helps create redlining products and the other seemingly punishes them? Now, I say seemingly because I think it's all a bunch of grandstanding crap. So, what did these guys do? The complaint filed in federal court on Wednesday alleges that from at least 2015 to 2021, Lakeland failed to provide mortgage lending services to Black and Hispanic neighborhoods in Newark. The Department of Justice said that all of the Lakeland's branches were located in majority white neighborhoods and that its loan officers did not serve the credit needs of Black and Hispanic neighborhoods in and around Newark. Now, this point is kind of interesting because they're not saying Lakeland banks didn't serve the communities where their branches were located. No, they didn't say that. They said that they didn't like where their branches were actually located because they weren't serving the right communities in Newark, New Jersey. All right, so what about Walgreens pulling out of San Francisco because of rampant theft built off of ridiculous city and state policies? Should they be punished? Maybe they should. I don't know. But the point is, we don't punish anybody else now, do we? We hold these policies exclusively for one industry alone, the mortgage lending industry, and that seems, well, not entirely helpful. Well, why do I say that? Well, because mortgage companies, unlike coffee shops or drugstores, are dropping like flies right now. And considering mortgage lending along with real estate is about 25% of our dwindling GDP in our time of recession and inflation, I hardly think it's right to continue putting pointless pressure on lenders where keeping the doors open is hard enough. Here's the point. Why in the hell would you lend in New Jersey in the first place? Here's what you have to do. Just get out of the state. As P.T. Barnum once said, there's a sucker born every minute, and he didn't even know any real estate agents. Well, why do I say this? Well, Zillow just debuted ShowingTime along with Bridge Interactive and Dotloop to win over agents, and it's going to work. Agents are going to flock to the singular most focused company in the entire world that's been trying to put you out of business now for decades, and you're going to pay them a whole bunch of money. Now, I wish this wasn't the case, but we've seen this dysfunctional relationship hard at work for decades, haven't we? Zillow and NAR are just like Ike and Tina, and sadly enough, you agents are playing the role of Tina. The difference is, I don't see a happy outcome with the likes of you guys right now. HUD's AHS American Homeownership Survey just revealed to us, the United States, a number of items that might be of interest to you for your sphere of influence. For example, did you know that the median housing cost for renters rose more than homeowners? Yeah, we probably saw that one coming, didn't we? The median renter now pays nearly the same as the median owner for total housing costs. That's a big one. Between 2019 and 2021, national median monthly total housing costs increased from $1,137 to $1,200 for homeowners, 5.5% over 2 years, and from $1,071 to $1,184 for renters, excluding renters with no net cash rent. That's 10.6% over 2 years ago. I mean, this is totally brutal. It now costs just as much to own a house as it does to rent a house. Now, this is an amazing talking point for great salespeople out there like lenders and realtors. Simply put, when you have a potential client who says, I can't afford to buy, you can now factually tell them that they can't afford to rent, and you can prove it to them. Now, this one seems easy. The internet continues to increase as a primary way people are finding their rental units. Duh, right? Between 2019 and 2021, 21 million households moved into rental units and 14 million households moved into owned units. Now, strangely, the internet was more widely used to find a unit to rent than own, or 43% renting in 2021, and in 2019, it was at 37%. Meanwhile, some 45% only searched in a single neighborhood. All right, here's the point, and it's quite simple. We just said that renters now more than ever need to buy homes. We know where renters are at right now, don't we? We know they're online and we know the areas they are. So if you don't have a listing, put your buyer's agent ad in areas where there are rental units. Your message should be something like this. Let me show you how to buy a house and why you can no longer afford to rent a house. Call me at this number. Hey guys, thanks for being with me today. We're on the mend right now. I'm going to be down in Nam in a couple of days. This thing should clear out and everything is going to be fantastic. Can't wait to see you guys there. Talk to you soon.